Hey everyone, Value Add Mike here today to discuss the Houston deal that over $200 million in commercial real estate defaulted, and what does that mean for you as a limited partner. For those who don't know, my name is Mike Taravella, Value Add Mike, and me and my business partners manage over $80 million in commercial real estate, specifically in the multifamily sector. And today I wanted to discuss the deal in Houston in which investors lost money due to a default and bankruptcy on several different deals in a portfolio. And so I think first things first, as a limited partner or even smaller operators like myself, because in the grand scheme of things, we're very small, I think if you're sitting on the sidelines waiting for these once-in-a-lifetime opportunities of default and distressed assets, I think you're sadly mistaken with the strategy, because brokers are going to have the first at-bat to these deals. On top of they're going to go to auction to larger groups. And so the group that snagged this deal in Houston was a large operator based out of New York with large investors. So don't forget, I think as you sit on the side, if you're sitting on the sideline, there's also much larger and bigger fishes that are sitting on the sideline that are well more capitalized. So I think for those operators and even limited partners, it's important that you continue to look at deals, continue to analyze deals, and just really see what deals hit your deal criteria. I think always think of the worst case that can happen in terms of rents, in terms of taxes, in terms of insurance, because Houston, I know, has been just getting destroyed. I mean, taxes, everyone's been getting hit on. I know insurance is a huge piece in the country, but I think it's just, you have to factor all of these things in an underwriting. And I think it's just super important that you think of those worst cases. On top of just deal performance, I think most importantly, it's vetting the sponsorship group. You want to make sure not only does the team have multifamily experience, but do they have experience in that specific asset class, in that specific market? How much experience does that team have? Because every deal, anything can happen, and past performance is not indicative of future success for sure, especially the last 2 years where rents were going up 20% year over year. But I think it's important that you make sure you have someone with seasoned experience that has experience with larger assets, similar vintage, similar size, because, for example, if you focus on a group that has 20 to 50 doors and expect them to manage over 200 plus doors across four properties, not saying this specific group, but just in general, the probability of success goes down because they just don't have that management experience. So just making sure that if you as a limited partner are investing in deals with groups that have that experience, they're more likely to take that expertise and their experience and just hone it even more and to double down on that. So that being said, I think it's just important that you underwrite the deal more to your worst case scenarios, making sure you're dealing with sponsorship groups that have that experience, know how in those markets to make sure they have it. Because at the end of the day, we are stewards of your capital, and we want to make sure we're protecting you and your investment as best we can. But if you have any questions on investing, please reach out to me. All my contacts and links are below. Like, comment, subscribe to the channel. And until then, we'll see you next time.